Yeah, welcome. It's great to see you all. I'm Maggie Lake. I hope you have been enjoying all the sessions that you've heard so far today. We are loving seeing all of you and connecting with you.
Well, welcome everyone. This is, it's Friday. It's getting later in the day, but we have actually a fantastic panel and a super interesting topic. I'm Morrison Warren. I am a securities lawyer, actually work for Chapman and Cutler, and I am not with the SEC. Here, we're trying to speak about these things in a very real way. I have a fantastic panel here of very diverse experiences. I'm going to have each of them explain who they are, their experiences with crypto, and then some of their background that may help explain where they're coming from, because this is a wide-ranging issue as it relates to crypto and regulation. You know, here we're focused on the SEC in particular, but there's a lot to talk about here. I'll start with Alex.
Thanks a lot. I'm Alex Levine. I'm the head of regulation at Dapper Labs. Dapper Labs, I'm sure as a lot of people know, is sort of the preeminent NFT company in the crypto space. But in addition to NFT issues and how that impacts regulation, we also created what's known as the Flow blockchain. So a lot of the questions around what tokens are from a securities perspective, I deal with on a day-to-day basis. Before Dapper Labs, I worked at some other preeminent crypto companies such as Trust Token, TokenSoft, and LedgerX across the product space in the industry. And I also previously held senior roles at both the SEC and the CFTC.
Hi, Sean Gilmartin. I'm the Chief Compliance Officer for DriveWealth Institutional. We're a fintech with a B2B broker-dealer, and we're looking to expand our vertical into crypto. Prior to being at DriveWealth, I was in the cryptocurrency space at a cryptocurrency exchange.
Hi, my name is McClurg. I'm the co-founder and chief investment officer of Valkyrie Investments. We're a full-service investment management firm focused on blockchain. The areas of business that we operate in are ETFs, including a Bitcoin futures ETF that was launched about a month ago, as well as a private trust for various cryptocurrencies, as well as a hedge fund business where we operate a DeFi hedge fund, and I guess we put venture in that category as well. And then we also operate technology for a lot of our own products, including masternode and staking services to offer our clients yield through proof of stake in various products.
Hey everyone, good afternoon. I'm Greg King. I'm the founder and CEO of Osprey Funds. We are a crypto-focused asset management firm. We have 5 funds looking to launch our 6th in Q1. My background is with exchange-traded products. I've launched over 100 ETFs and ETNs in my career with Barclays, Credit Suisse, a number of other firms. We started Osprey Funds a few years ago just in the hopes to drive access products to the market for crypto. I began investing in crypto in 2013 and then took an interest in combining my hobby with my sort of day job of building ETFs and exchange-traded products in about 2017 when we filed for a Bitcoin ETF. In 2019, we seeded the Bitcoin Trust that is now trading under the ticker OBTC. It is the least expensive way to get publicly traded exposure to Bitcoin in the US market, and we have several other funds that are similar with other crypto coins. And then in Q1, we're launching a hedge fund targeting NFTs. So great to be here with you all.
Well, thank you all. I really want to sort of set a base for us to understand what we're dealing with. And dealing with the SEC, I think it's helpful to understand who the SEC is and who are the players at the SEC and what their mandate is. Alex, you're no longer with the SEC, but to give a sense as to what's the SEC's mission, what's their mandate, and so we can have a full understanding of where they're coming from.
Right, so the mandate of the SEC is obviously to ensure both efficiency and fairness in the securities markets. They also have a mandate to protect investors within those markets. And importantly, it is only securities and securities products related that are ultimately within their jurisdiction. So the core question that, I think the industry has been struggling with vis-a-vis the SEC has been exactly what is a security and how is the SEC going about making that determination. In many ways, the current chair of the SEC, Gary Gensler, has sort of made it known that he believes almost everything is a security outside of Bitcoin. He's even made statements that potentially Ethereum is a security. So the reality is that when you're dealing in this space, you have to deal with the risks that, SEC exposure and scrutiny, may come along at some point.
Yeah, I think, Alex, you said it very well. Mr. Gensler is proof positive that you can be crypto savvy and not crypto friendly. And watching the movement towards everything's a security is a little disconcerting. His conversation with Clayton last week was, you walked away with it with less clarity out of the SEC. The line he said during that Wednesday conversation was, come and see us and register with us. Register as what? Right? Depending on what your platform is, whether you're a cryptocurrency exchange or, it didn't make, there's still a lot of mud in the water in terms of where the SEC fits in a crypto landscape.
I think it's an important point. The framework upon which these determinations are being made is based upon precedent and history. And there is a really serious question as to whether that is the right basis for making these determinations. Sean, could you help us with what we're up against in terms of making a determination as to whether we're dealing with a security, a commodity, or just some other thing?
Well, according to the SEC, it's all based on the Howey test, right? So you have one Supreme Court case, which is being used as a body of law to determine whether or not these tokens are in fact securities. I think most of the crypto community would agree Howey should be a guideline rather than a bright line test. And it's unfortunate that our financial markets are so siloed. So what we've seen over the past 2-3 years is every federal agency trying to throw their hat in the ring. So whether it's the SEC, it's CFTC, it's OCC with crypto charters, it's Consumer Financial Protection Bureau. And then you have legislation on the Hill. So the Digital Commodities Act of 2021 is a reprint of the Digital Commodities Act of 2020. You have roughly 18 different bills coming through Congress in some way, shape, or form. And it's not at all clear. So you then look to state regulation. And where state regulation is good for what it's good for, you see infighting in certain states, especially in New York. So New York, who was most progressive in stipulating a virtual currency license, is now having, right, Department of Financial Services is starting to deal with interstate rivalry between New York Attorney General. So the Attorney General's office is requiring certain platforms to register under the Martin Act. Well, the Martin Act exempts banks, brokers, money transmitters, but not virtual currency licenses. So the regulation is still very much in flux, even in the States.
And the investments have come a long way. Exchange solutions have come in a long way. Even the way that Bitcoin futures trade is really based on Bitcoin prices that are surveilled through 5 different exchanges. So all of that really has come the same way, but I agree with Greg that I think that's where Chairman Gensler is looking to get some control over is, okay, well, we have some exchanges in the US. If we can surveil those and they submit to the SEC, then we wouldn't have a problem there. The problem with that, though, is no exchanges would really want to do that. Number one, if it was a Bitcoin-only exchange, for instance, just to keep it simple, which there aren't many of those that exist, Bitcoin's not a security, so why would it go under the SEC? Second of all, most of the exchanges have so many tokens that are listed. Some of those tokens have to be securities. You know, there's just too many, and too many various types of issuances that they would put themselves under a lot of scrutiny just for some of the tokens they might have. So I don't really see that happening anytime soon. But that's all I got.
Well, to add on that,
Greg's right. It's the cleanest dirty shirt, but it's the cleanest dirty shirt because, again, they're intermediaries, right? Based on the futures product that underpins the ETF.
Yep.
Mm-hmm. And to add on to the point about, you know, the potential for securities being traded on exchanges, I mean, traded on exchanges. Exchanges are put in a bit of a catch-22 with how the SEC sort of views the security status of potential tokens, because you can have a token that at its issuance or at its, you know, ultimate minting or its genesis block that very much is a security, and that over time can become decentralized to the point where it's not a security. And the SEC currently sort of takes the viewpoint that the initial status of the security will be maintained for those tokens at that point, even if they're intermingled fungibly with all other tokens. So you have this sort of problem where there's no really way to ever sort of cure the potential security status, and the SEC has not given guidance or, you know, taken seriously safe harbor proposals that might allow that to happen.
Commissioner Peirce's proposal, what did you think of that in terms of solving for that issue?
I mean, I think Commissioner Peirce's proposal is a great step forward. You know, the idea that you as a project could come forth and, you know, register with the SEC and, you know, disclose what you're doing and ultimately move down the path of decentralization under the guardrails of a sandbox, you know, that is ultimately overseen by regulators. And I think, you know, you see in Congress a number of bills that are sort of, you know, paralleling Commissioner Peirce's, you know, proposal. So, I mean, there's a lot of interest in the industry in it, and I think it's a very important step forward. But again, unfortunately, it's not getting traction at the moment.
Now, advised years ago by a colleague who worked at the SEC, and he said, listen, I'm going to save you a lot of trouble. Just, it doesn't compute. And you know, whenever something like this happens, I kind of remember that. But, you know, I do think that let's say Gensler in this case, his actions are probably logical when you consider the SEC's mandate, but then you consider all the other competing interests, right? The SEC's political ambitions versus other agencies, the political climate, career aspirations, et cetera, et cetera, et cetera, et cetera. And then you start to get the whole picture, and if you analyze things with enough information, then they do seem rational. It's just that we only ever have partial information, right? And so we're here trying to provide funds. Why are we trying to do that in the first place? You were asking what's the benefit. I think the benefit is giving investors access to life-changing technology, right? Not everybody's going to, you know, pull money out of their IRA and take a 10% hit and go and try and, you know, set up a Coinbase account or whatever. Some people want securities that they can hold in very familiar ways, and that's what, you know, Stephen and I try to do. And so it can seem very, you know, much like a head scratcher when, you know, teenagers can go and buy crypto directly, but, you know, wealthy 50-somethings are not allowed to buy a Bitcoin ETF, you know, when they have safeguards around the whole thing and their advisor recommends it, et cetera, et cetera. So to Stephen's earlier point, we try and get creative because that's what we have to do in this environment. But a lot of these things can certainly seem irrational, but given the whole context, they might be fairly rational.